Okay, welcome back. Let's see if it works this time round. And sorry for those of you who turned in earlier and it doesn't seem to be working, but I think it should be working now. Okay, so if you are able to watch me on YouTube as well as our other channels, can you please say hello to your teacher at the chat? And I know you are tuning in. Oh my gosh, we missed by about 15 minutes. All right, so wow, finally I get to see the crowd in. Welcome back, Adeline, John, good to see you again. And I think we lost quite a number of people because just now we got issues with the YouTube streaming. Hello, Lily, good to see you again. And I can see you guys are coming from different places, right? Leo coming from YouTube, Ryan from Facebook, Luba from Facebook, Brandy from YouTube. Brandy switched over to YouTube now instead of Facebook just now. Okay, thank you guys. Thank you very, very much. Then it's meaningful for me to do today's sharing, all right? So as you know, the market has opened up and I think it's streaming live right now, fine. I just do one last check and then we go on to tackle the current market, all right? So is it live right now? Let me just check. Yeah, I think it's live right now. Okay, so here we go. I'm going to switch over my screen at this moment and let's tackle a few things together, okay? Step one, we're going to look at, hi Paul and Kelvin, welcome back, good to see you guys. And here we go. So step one, we have Dow falling 600 points at Wall Street grapples with recession concerns. And you know, this is the time when, if we look at the three indices, all red, all right? So this is what we are looking out for. And then we're also going to look at our inverted yield curve. Do we have a negative hit today? So those are the things we need to check. So first thing first, let me go and refresh on the negative yield curve. 10-year spread minus the 2-year spread. What is the real number we are looking at? We are close again to the inversion. So this part here, the moment it kind of falls below the zero, we again have a repeated inversion, all right? The previous time, we kind of have a hair crossing it, and that's the second time repeat of the inverted yield curve that precedes a recession coming up in the next 18 to 24 months. So this is the big debate for tonight. Everybody's just so freaked out about the market. Then we go across to look at the three indices, right? So I'm looking at a 200-week simple moving average line, and we are not crossing through yet. We are safe, all right? It's not like, I mean, today's candle is not even lower than the last low candle, right? So I think it's just because of the post-Independence Day celebration, everybody kind of just woken up from their drunkenness or whatever. So it's still okay, all right? So I'm going to look at NASDAQ as well, NDX, and see how close we are. Wow. This one is also not that close. It's still fine. Just stay that way, hang on in there, right? And the last one is, most important, is S&P, all right? So let's take a look at S&P again. We are close, but not that close. We're not touching the 200-week simple moving average line yet. So this is fine, okay? And once we check through this, the next thing is there's so much concerns about energy. And Warren Buffett again bought some more Occidental. We're going to take a look at the crude oil. So I want to do another hard refresh and kind of make sure where exactly are we right now, okay? So what I do know about is Russia has begun to come up with excuses, giving excuses of maintenance. They start to squeeze on the Nord Stream, the gas supply to Europe. And they keep squeezing it to apply pressure to the European allies who are turning against him, all right? So energy is taking a hit today. All sectors are, in fact, in the red, but it's not like a big drop. So this is still, I mean, it's standard volatility that we are observing, anything above 100 to 125, we are still within the red box. So energy is fine, all right? But today what I really want to discuss with all of you is something really interesting and fascinating, all right? And I like to call it a tale of two cities. Now, what do I mean by that? The previous time I spoke to you all about Tesla, right? And today we heard about the deliveries on last Saturday. We passed through Sunday, we passed through Monday, Independence Day. Today we are Tuesday, right? So let me show you what I meant by a tale of two cities. Straight off, the first guy is called JPMorgan. And JPMorgan trims price target for Tesla, saying that the shares could fall more than 40% on weaker deliveries. I mean, more than 40%, you might as well just say 50%, all right? So let's take it at about 650 divided by 2, 325. He's telling everybody it's going to drop to $325 for Tesla. All right, so I go and open up Tesla chart right here, and you see for yourself what is the meaning of JP Morgan when he says that it's going to drop to 325, all right? It is as good as proclaiming that, Tesla has gone backwards to the month of August in 2020. And they are expecting Tesla to continue drop until this point here. All right? So this is the first tale, the tale of two cities. All right, the first city is JP Morgan. The second one, Deutsche Bank sees Tesla rallying back above 1,100 on sharp recovery in the second half. So for those of you who followed through with me on this 100 days of the daily stock market inspiration, you are getting a very balanced view from a blowout delivery to me, which is I call a miracle quarter for Tesla. And then you had two different analysts coming out with two different, complete opposite heaven and earth price target for Tesla. So Deutsche Bank is looking at 1,001. So who is right and who is wrong? So 1,001 means what? It is going to travel right now to the previous high. Right? So first of all, of course, it must pass through 700, which is an important point. Then it goes to 1,001. The other one, expecting it to grow, boom, to 325, around here. How could two learned analysts have such divergent views on the same company called Tesla? You're looking at it right now, all right? This is real-time and analysis for you guys. And we have already taken our position, our stand, our thinking about Tesla. And today, you got two divergent views. All right? End of the day, who is right or who is wrong? The price is always right. So what do I mean by the price is always right? So you see, between last week and today, all right? So last week, before they announced the delivery number for Q2, it was in this price range. Today, with the two analysts coming out with divergent views, it is right now in this square box right now, right? So we gone through two square boxes. End of the day, who is right or wrong is the final price. The final price is the winner. So of course, it went through just now at the opening, kind of freak out everybody. When dropping here, boom, and touch 650. And after touching 650, boom, rebounded back to 667. Right now, everybody's trying to absorb the news and trying to make some sense. Should I get into Tesla or not? All right, so of course, the moment pre-market we spotted any drop in the price, we quickly modify our order. So that is a standard. Just quickly modify. Don't even process your brain yet. Let everything play out. Modify so that you negotiate really, really hard. That is always my stand because there's not enough time to think. Now that, how much time has passed through? 1 hour has passed through. 9:30 opening bell to 10:30, 1 hour has passed through. And then you begin to sink in and say, okay, what is the final answer? The final answer, there's a V shape. The market has absorbed the news, went back up 666 right now, But the 666 is still not higher than the closing price on Friday. All right, so Friday's closing price is here, and right now 666 is here. So it's still not above yet. It still needs some kind of room to do a catch up before it goes above the last Friday's candle. All right, so this is what we are looking at. Now, what can you learn from this? There will be many, many noises during this period, extreme volatility. I don't have to belabor the point that there's all this big fight about energy, about Russia, and today, you know, just as I was sharing yesterday's video about Iran coming into the picture, true enough, they came into the picture. True enough, they came in the picture. Can you believe that, right? We were just talking about Iran because what was the debate about? I was asking that, what is the carrot and stick that Joe Biden could possibly offer to Prince MBS of Saudi Arabia? The carrot and the stick will be Iran. And true enough, somehow in a very miraculous fashion, Iran adds demands in nuclear talks. Enrichment alarming, U.S. envoy. Hey, the message from who? U.S. envoy. Ahead of President Joe Biden's visit to Saudi Arabia. All right, so this is like, you know, Iran tests new trade corridor to ship Russian goods to India to mess up the thing. Iran's regional outreach tested as Turkey plans Syria operation. So, all this is happening before President Joe Biden appears on the Saudi land. And this is highly, highly complex level, the game that they're playing. In fact, just now on CNBC, they were already talking about it. You know, prior to this visit, I mean, Joe Biden will be there for 1 day. They should already, at the back end, negotiated certain things already. But how much more output can Saudi pump out? That is what everybody is asking for. And I'm asking how much carrot and how much stick that the president of the United States can throw onto Saudi Arabia. So as a result, there's right now turmoil in the energy market. And again, we go back to our sector look. So how do we go to our sectorial look? Right here, are we looking at all red? Yes, everybody. Today we are looking at the all bloody red sectors, 11 sectors of the market, all totally consumed in the Red Sea. And relax. Just relax. You know, today I received a message from a student, and the student was requesting to me, teacher, you know, every time I attend your class, every time I attend all the gatherings, all the cozy live trading, I feel very, very positive, very energized. But may I request that you just do one class on pure psychology? I mean, what do you mean by one class on pure psychology, trying to motivate you, give you a shoulder to cry on and all that? No, you don't need that from me. What you need is just keep staying on with me on this daily YouTube series. That as I look at the market, you think about what are the data points I'm looking at. And it's like a game. All this is just a game, a passing of wind. Very soon we'll be out of these woods, all right? Don't worry about it. Look at the data. Yes, the data is Red Sea today. Then look for things that will continue to drive the market. You know, I got one trade fill up just now, and I'm going to send a notification to those of you who my don't stop believing trades notification. I'll be sending out after the YouTube, right? And there's two more that's like on standby. I think about to get filled also, just watching, and I may just modify the trades later on, all right? So this is the part. You just got to hang out for the ride and don't panic. And unfortunately, the student wrote that, you know, he realized his losses. You know, this is the part I'm scratching my head. You realize your losses right now. I mean, how much more can you do? You realize your losses, just get back cash to trade. That's not the idea. Because at this moment, you're talking about realizing losses, is too late already because the market has moved very, very fast. All right, just hang on. You don't have to intentionally carve out a sum of cash just to say, I got to trade in the market. No, not the idea. Those that you already traded, you must have the conviction to stay true. Unless, again, I highlight to all of you, you are in a state of emergency, you got a heart transplant, liver transplant, and you need cash so urgently, because if you realize your losses is just to do one thing, making yourself feel comfortable. I know you are very, very uncomfortable right now, and not easy to look at the Red Sea, not easy to so many bad news coming left, right, center, and non-stop action. But there's still some positivity in the market, all right? And I'm looking at the Chinese data where, they are right now negotiating with the US between two guys, Janet Yellen, the Treasury Secretary, and Liu, who is the top negotiator for China, right? So let me just, Liu He. All right, let me just show you this. This is important, okay? This is the article that you have to think about what will trigger a very, very strong China rebound. This is the article. China's Liu He and US Treasury Secretary Janet Yellen hold virtual talks. All right? It's a virtual talk. It's at least it's better than Donald Trump era, right? So the Chinese read out one very important line. All right? And that is this paragraph. The Chinese read out, mention US tariffs and sanctions on China, but not geopolitics. All right? But the US readout did not mention tariffs or sanctions while noting the global economic impact of Russia's war against Ukraine. So China is going back to Americans and say, hey, I think you are pushed to the edge right now. Why don't you one shot, a unilateral deal, remove all tariffs of China's import into the American market? This will be good for everybody. I mean, every single merchants in US will be celebrating the moment they remove the tariffs. Goods will become cheaper, kind of also in a way able to bring down the prices and, allay the concerns of inflation. So this is good. This is really damn good. And it's something kind of a strike between US and China. But, posturing, Biden feels that he looks very weak out of this conversation with China. But, domestically, he's in a really fire, pants on fire situation. And something good might come out of this, all right? So every day, what I do is just connecting the dots, looking at all this information and ask myself, is there anything good coming out of it? But again, the real question is, how much pain can you handle, your pain threshold? I can handle quite a lot of pain. I mean, I've seen it a lot, and that's the reason why I'm just over here looking positively at every single news, and the big thinking on my mind is China right now is confirmed the leading indicator for global recovery of the stock market. So there you go. Today, I think we spent quite some time just now early on troubleshooting. And for those of you who are watching me on YouTube, Facebook, thank you so much for your support. But when you chat with me on I know those of you who chat with me on the YouTube live chat, and after the live streaming is over, your chat doesn't appear on the comments, right? So I encourage you, go to the actual comment page to comment, not on the live chat. Then by the time the video over and I review, take a look at your comments, I can really read them and comment back to you, all right? So thank you so much for your support. Now, I got 1 hour left before sharp midnight. Typically, I want to fire off one more trade for those subscribers on the Don't Stop Believing trades notification, all right? And for those of you who have not joined us yet, please make sure you really join us at, what's the website called? spi.ke/belief, BELIEF. All right, join us on the trade notification. This is something, it's really on the go. When there's a modification or trade, I quickly fire up. When there's a fill or the trade, I quickly fire up. And this is the way we're going to trade once per day, 7 days a week, over all the way until end of this year, until we complete H2 of 2022. Okay? So tonight, it is what it is, relax. But I really encourage you to read the two analysts' divergent views on Tesla. Really, really fascinating. After we taken a position on Saturday about Tesla deliveries, right? And then today we got two great divergent. And of course, the price of Tesla will continue to move up and down. There's a lot of volatility. And that's the fun part of it. Okay? And I shall look forward to see you guys again tomorrow. Thank you for logging in tonight. And tomorrow I want to make sure we really set up clean and no bug and no technical issues and all that stuff. Thank you so much, and may God bless you. Goodbye, everybody. Thank you.